Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So small and mid-cap stocks still have their issues, but large caps are still doing just fine. And that is actually going for the broader large cap index, the equal weight S&P 500. Because if we look at RSP, it is outperforming SPY and QQQ. But the real action here in 2022, outside of banks, would be in the commodity space. And if you look at the Deutsche Bank commodity ETFs, energy, base metals, agriculture, they're all performing well in uptrends at or near new highs. And we're even seeing gold starting to make a move, and silver could have a massive double bottom taking shape. So I was looking at some charts in the Trend Investor Pro Essential Breadth Indicator chart list, which is available when you subscribe to TrendInvestorPro.com. I've got dozens of breadth indicators, over 100 customized charts. And if you're a StockCharts subscriber and you subscribe to Trend Investor Pro, I'll send you that list. And if we look at this list here, the first chart I'm going to show here is 80%. And so this is advances less declines divided by total issues. We've got it for the S&P 500, the S&P Mid-Cap 400, and the S&P Small Cap 600. And we can see that we had a lot of selling pressure on Tuesday when that indicator dipped below minus 80% for mid-caps and small caps. So that was a lot of selling pressure. That means that more than 90% of mid caps and small caps decline. That shows a lot of participation to the downside. And we can see the S&P 500 didn't quite get below minus 80%, but we still got some issues with small and mid caps. We've probably all seen that IWM broke below its spring, summer, and autumn lows, and mid caps failed to hold their breakout. So a lot of weakness when we go down into the lower part of the market with the smaller stocks. So here's a chart of IWM, and there you can see it breaking below those lows. But note that I've never been one of these that thought that small caps were the canaries in the coal mine. And if you see small caps underperform, that's bearish for the whole market. The S&P 500 is its own beast. And if you look here, there's a ratio chart of IWM to SPY. And IWM outperformed into February, March, and then it's been underperforming since March. And that price relative is hitting a new low. And SPY, sure, it's down, but it is above its 200-day. It's still much closer to a 52-week high than a 52-week low. And this relative performance in IWM did not derail the S&P 500. You need to focus on the S&P 500 indicators if you want a true assessment of that index and the market. If small caps are underperforming, then avoid small caps and stay into large caps. And if we look at the S&P 500 here, we can see it's still in an uptrend. We had a 52-week high just a few weeks ago. We came down. We're still above the December lows. We haven't broken below those, and we haven't broken the 200-day. Now, there's three indicators I want to show, and these are kind of ones I watch for the health of the S&P 500. Here's the high-low line, a cumulative measure of net new highs. And you can see it's been rising for a year now or more. It's above its 10-day EMA. So as long as that line is rising, you have more new highs and new lows, and that is bullish. The other one would be the percentage of stocks with a silver cross. Now, I've got the percentage of stocks with a golden cross. That's the 50-day EMA above the 200-day EMA. And then the silver cross is the 20-day EMA above the 50-day EMA. And you can see I've got these bands here at 60% and 40%. So we moved above 60% there in early June. That was bullish. And it stays bullish until we go to below 40%. We almost dipped below 40% in October, but not quite. And you need to use these thresholds to prevent whipsaws. You'll be a little bit later on the signal, but the idea is to prevent whipsaws and catch trends. And this has caught a pretty nice trend in the S&P 500. So until it goes below 40%, I consider this indicator bullish. And then the third one is the Bullish Percent Index. And again, you can see that in the indicator window. I've got my lines at 60% and 40%. The Bullish Percent Index tells you the percentage of stocks with point and figure buy signals, double top breakouts, basically. And so when that gets above 60%, you've got a bullish situation. And I don't turn bearish with a move below 50% because you get too many whipsaws, but I wait for it to go below 40%. So if you go below 40%, that means more than 60% have double bottom breakdowns or lower lows, P&F style, and that is bearish. But you can see this indicator turned bullish as well in late May and remains bullish. So until two of these three turn down and break down, the S&P 500 is doing okay right now and is not in a bear market. And again, check out trendinvestorpro.com if you'd like to know more. There are all the offerings that we do. We have an ETF trend table. We have an ETF report on Tuesdays and Thursdays now. We've got some proprietary breadth models for market timing, some strategies that have been back tested, videos, and then there are the two bonuses for StockCharts subscribers. Now, here's a chart that shows SPY in the top window, and you can see it came right down to that December low there. Here's RSP, the equal weight S&P 500, and there is that December low, and you can see it held further above it. So RSP is showing a little bit of relative strength relative to SPY, and we can see that with the ratio chart below, RSP divided by SPY. So it's been underperforming for a while, but look at that upturn since December and into January. So the average stock in the S&P 500 is starting to outperform the large caps that dominate the S&P 500. That would be the top 10, basically. Go to the SPY website to see the holdings if you want to know the top 10. But this is interesting that we see the equal weight starting to outperform the large cap weighted S&P 500. So now we'll turn to commodities, and these commodity ETFs are leading the market right now. They're hitting 52-week highs or very close to 52-week highs, and they've had really good Januaries here. Here's the energy ETF, DBE, and look at that move it had in January. And if we go back to the upper left here, you can see the indicators that I'm using. I'm using the momentum composite here, which identifies oversold conditions in an uptrend, because I only look at these oversold conditions when we're in an uptrend. And then the trend composite, which is a trend following indicator that aggregates signals in 5 trend indicators. And you can learn more about these by clicking that plug-in icon on the lower right. And there you will see, scroll down, Trend Investor Pro Indicator Edge plugin. So click on that to learn more. But it's been bullish for quite a while. I'd have to open this back up to see when it turned bullish. And you can see back in August 2020, this turned bullish. So you had a correction, a couple of oversold readings, and then look at the breakout there. And another correction and a breakout, a couple of oversold readings and a correction and a breakout, and then a deep pullback, very oversold. But we got a really nice breakout there in December. You can see first we had the surge, and then we had a little dip and that breakout there, and that was bullish. And that was simple for the reason that the trend composite was still bullish. And so by default, I assume this correction, this pullback, was a correction within a bigger uptrend, and this breakout was a resumption of that uptrend. So this is a bullish configuration. There's no setup on the chart, but it's a leader and it's at a new high. So base metals are also performing very well. We can see the trend composite here has been bullish on the entire time frame for this chart. And we only had one oversold condition there in June after this dip. Then we had a surge to new highs, a pretty deep dip there. But the trend composite stayed bullish, consolidated, and then look at the breakout that we had there in late December, about the same time oil was breaking out. and moving higher into January. So this is definitely one of your leaders here in January. Now, if I go to another one related to this, base metals, we'll go to copper, CPER. And copper has a big move up the last 2 days. It's been dragging its feet a little bit, but we identified this falling wedge at Trend Investor Pro because I'm looking for pullbacks after an impulse move. And this was identified as an impulse move. This is a correction. And then there you can see the breakout. And look when it's happening in late December. That's when base metals and energy were breaking out. A little bit of noise around the breakout, but holding more or less and then moving higher. So I would still be bullish on copper. And if you're bullish on copper, then you should probably be bullish on copper miners. If I go to COPX, it's even stronger than copper. Now you can see that the trend signal triggered a little late here. It got going on this breakout surge here. But what we were looking at, I also look at price analysis, and this was a breakout, an impulse move. This was a correction, and it got a bit noisy. So you had this breakout here above the trend line, but then consolidating, and look at that surge now. So it looks like copper's ready to continue its uptrend and participate with the rest of the commodities. And then one more I want to do here. I featured this on Monday on StockCharts in a written commentary, and that is DBA, the agriculture ETF. You know, it may be boring, but boring is not that, it doesn't bother me. What I want to see is I want to see an uptrend, and I want to see a bullish continuation pattern, and that's what copper gave me. You know, I featured copper here in October when it had this big cup with handle, DBA. I featured it in October when it had this big cup with handle, and the signal was on the wedge breakout, the anticipation of the move to resistance. And then we get the breakout here. So we have a big move up from September to November, and then we have this consolidation, a triangle, and we got a break out of that triangle and a continuation higher. So agriculture is moving higher. So clearly there's a theme here. Base metals, energy, agriculture, all moving higher. Let's look at precious metals next. So quickly on gold, I would suggest the cup is half full with gold. You can see the trend composite turned bullish with this breakout surge that we had in November, had a pullback that ultimately formed a higher low and are continuing higher. So gold looks more bullish than bearish. And then if we look at silver, silver is still technically bearish. You can see the trend composite turn bearish there in July. We could have a double bottom with these two lows here, but we need to break above this high. And silver, I think, needs to break out, and then I'll look for a potential pullback, but I don't see a setup right now. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.